Hey, and welcome to the Dividend Portfolio. Today we're going to look into the non-weekly. So if you would, hit like and subscribe, and let's get right into it. Hey, and welcome back to the Dividend Tracker. Today we're going to do the Dividend Aristocrats, Index Funds, Monthly Dividend Stocks, and Monthly Quarterlies. So let's start off with the Dividend Aristocrats. And if you look at this is your... most of these pay, I think they all pay quarterly. So you can see the way it's broken down, you're up and down on your dividend payment, which would be normal for quarterly payers. I didn't balance them based on the amount paid per quarter. I just built the portfolio of some quality dividend aristocrats. If you're going to build it and you need more stable monthly income, then that's something, that's a lot of math, but this gives you a good idea how to do it. As you can see, CAT is still up. It's up from 681 to 952. So you can see it's off its high. It was over 1,000 at 1,033 down to 952. So it's lost about $80 in the last week or so. This one pays $1.63 dividend. And remember, none of these are going to pay a huge dividend return. They're going to pay you the same 4 times a year. So that $1.63, you're going to get that 4 times, and then next year they'll raise it by a penny or 2 or 3. T Rowe is up 30%. Ben is up 27. SWK Stanley is up 15. ESS is 15. Coke is at 8, and Mozilla MO is at a little over 7.5. We're only 3 in the red right now, so some of these have. A couple of these a few weeks ago, a lot of these were in the red, but they were right at break even. Like, see, this one's only up 45 and 63, so little moves will put those between red and green. And the highest paying dividend is Kimberly Clark at 4.55. As you can see, the values of these portfolios, other than these 3, the total value is above 10,000, which is our start price. So that's good. And our best is 13 and 13. Let's take a peek at T Rowe. Its dividend is $1.30. So it's $1.30 on a $100 stock, where CAT was $1.63 on $900. So you're going to get that bigger yield. And it looks like it goes up 3 cents a year. It has been their norm. Dividend Aristocrats are what you're going to build. This will be one of your base investments. If you want to do individual stocks, they're big companies and they're solid companies, and they have a 25-year history of increasing their dividend. And they've been around a long time. They have price stability. Even they'll go up and down with hard times, and they'll go back up with good times. But this is kind of like one of your bases if you're going to do it in individual stocks. The Dividend Aristocrats is a list you can look at, because you can see just by randomly picking, we've got over 15% on a little over a third of the portfolio. And these I did not research individually and pick the best. I just went on one of the AIs and got a list. I said, give me this number, and that's what they returned, and that's what I used. If you're going to do individual stocks, obviously you'll want to do your own research. Alrighty, index funds. Let's take a peek at that. It's up overall and on day. Nice growth. And these are going to be low dividend payers. As you can see, the best is only 3.23% on SCHD. It is up to 10,571. So look at that. All of these are in the green and they're all above our $10,000 initial. QQQ is the steadiest grower. And then VTWO is right behind it, and it pays a little bit higher, like a half a point higher. These are going to be your base, your 10 to 15% growth investments, and this is also gets you your diversity, as opposed to the Dividend Aristocrats, where you're picking one stock, and if something terrible happens to that company and you don't hear about it for a few days, you could use a lot. These are broad-based, so you will get diversity out of these. So these are a good diversified base, and you're not going to be worried about your dividends on these. But this is a good thing to have in your portfolio. And as you can see, some of these are not terribly expensive. You got $100. This one's only $24. You've got, 19, 27, 119. So some of these are lower price, so you can pick up a few extra shares at a lower price if you want to go that route. If you don't want to put a whole lot into one, you can spread it out amongst several at a lower price. Index funds, okay. Monthly dividend stocks. We've done good on those. The winner is Apple. And remember, Apple Hospitality REIT, not Apple, the company Apple. These, you can see a lot of these are lower price, under $100. So you can pick up a handful of these without, you can get good diversity in these, is what I'm trying to say. And as you can see, we've got the top three are all above 10%. So if you wanted to diversify amongst the top five, because look at, you still get 6%, you get 12%, you get 11%, and 11%. So some of these paid good dividends. Let's take a look at Trend. It's 17 cents. And this one switched from quarterly to monthly. And 17 cents is about a third of what was paying quarterly. So 17 cents is a good return. As you can see, it's 11%. And it's had a good price growth. And this is a 1 year over the last 3 years. You can see it's trending up. So you're going to get a 10% dividend on a trending up investment. So that's pretty cool. And these, the REITs are generally considered in the housing, rent, commercial real estate, those kind of things. So if you're into the real estate market and you think it's going good, this is a place to look to get your start. And then the last group is the monthly quarterlies. We're in the green, which is good to see. And a lot of these are, look at that. We only have 2 that are under 10,000. This one was just barely under. And so was that one. So these have all held their value or gone up really well. You got a lot in the 11 to 10, 11. You got the top 3, and then you got the 5 to 8 through these. So these are also diversified accounts, and they pay, let's see, who to pay is good. QQQI pays a good dividend at 66 cents. Let's see if it's any consistency to it. So the lowest I see is 53, and it's been going up and up and up. So the 66 cents is a good return. As you can see, it was down in the low 60s, and every month, 66 cents on a $56 investment is a good return. Alrighty. Anybody else standing out? JEPQ This is one of the more popular ones. I've heard of this one a lot. 64 cents again. And that seems to be in line. It's trending up. It looks like it's up from the high 40s, low 50s up into the 60s. And it's probably had a look at the price uptick. 5-year. So it's continuously grown. So this is a long-term hold. And QYLD is another in that. This is a long-term hold. You're going to see a little ups and downs, but it's had steady growth over the 5-year period. And its dividend is 11% at 19 cents. So QYLD is a good one to hold also. So that is the non-weeklies. So we've done really good across the board on the non-weeklies, and I'm getting to become that as a trend. Yeah, the weeklies have been, they've been tough. So I will, in the next video, get to the weeklies and the covered calls. So thanks for joining me. If you're still here, like and subscribe, and we'll see you in the next video. Thank you for staying to the end. If you haven't yet, please give me a like and subscribe. It means the world to me and helps me make more videos. Thank you so much. Goodbye.